Good afternoon, and welcome to Module 4 of Stock Analysis, a comprehensive guide to building a high-quality dividend portfolio. In this module, we'll focus on the key metrics that matter most when evaluating dividend-paying stocks. These metrics will help you identify stocks that generate consistent income and align with your long-term financial goals. By the end of this section, you'll be equipped to confidently shortlist and analyze dividend stocks. What are dividends and why are they important? Dividends are periodic payments made by a company to its shareholders as a reward for their investment. Think of dividends as a paycheck for owning shares in a company. They represent the company's commitment to sharing profits and its financial health. For investors, dividends are not just about income, they are a key indicator of stability and long-term growth potential. Dividend-paying stocks are often the cornerstone of portfolios built for financial stability, reliable income through economic cycles, passive income, regular payouts that can compound over time, legacy wealth, assets that provide income for future generations. Let's explore the essential metrics you need to evaluate a dividend-paying stock. Number 1, dividend yield, the annual dividend payout as a percentage of the stock price. Why it matters. Dividend yield measures your income potential. A higher yield, above 6% for example, is appealing, but must be balanced against risk, for it may indicate instability of unsustainable payouts. We suggest, as a rule, avoiding stocks with a yield above 80% and aiming for stocks with yields between 2 and 6%. Example, a $100 stock with a $4 annual dividend has a yield of 4%, signaling stability and growth potential. Number 2, dividend payout ratio.
The percentage of earnings distributed as dividends. Example, a company earning $10 per share and paying a $6 dividend has a 60% payout ratio, balancing rewards and reinvestment.
Why it matters. Indicates sustainability. A lower ratio ensures the company retains earnings for growth. As a rule, look for a payout ratio. Below 60% and consider stocks with a ration. Above 80% at high risk of overextension during downturns. Number 3, dividend growth rate, the annualized percentage increase in dividends. Why it matters. Consistent growth signals improving profitability. Benchmark, 5% to 10% annual growth over 5 years. Example, a company increasing its dividend from $2 per share in 2018 to $3 per share in 2023 has a growth rate of approximately 9.5%. Number 4, dividend history, the company's track record of paying and increasing dividends. Why it matters. A history of consistency, even during downturns, signals reliability. Dividend aristocrats are companies with at least 25 years of consecutive dividend increases, making them excellent candidates for stable income. We suggest you start your research with these stocks, which can be found using a simple Google search. Organizing your research. To evaluate potential dividend stocks, use the following tools and resources. Google, search for current dividend aristocrats list. Yahoo Finance, use screeners to filter by yield and payout ratio. Bar chart, for dividend-specific data. Market Watch, for comprehensive market trends and stock-specific performance. Putting metrics into practice. Create a spreadsheet to organize your findings or inquire about our ready-made stock analysis template. Populate data using the resources above. Evaluate stocks against the benchmarks provided. For example, identify stocks with yields between 2% and 6%. Eliminate those with unsustainable payout ratios or inconsistent dividend histories. Focus on companies with strong growth rates and reliable payment records. By focusing on these metrics, you're well on your way to building a dividend-focused portfolio. However, dividend investing is just the beginning. Advanced strategies like analyzing financial health metrics and balancing portfolios with growth and speculative investments offer even greater potential. In the next module, we'll touch on these financial health metrics and explain how they complement your dividend analysis, setting the stage for building a diversified and sustainable portfolio.